Hello traders, it is 9:32 on October 9th. As expected, bullish rally that we took advantage of multiple times yesterday came to complete stall, reminding you the importance of reversal zone. We witnessed 5 points pullback after half an hour after FOMC release, worthless chop, and finally pretty impressive collapse. Guess what I'm paying attention to the downside to? I know extremely well to pay attention to the downside to 1944 area. That's what price is telling me currently. I know extremely well that this bullish pullback is completely worthless and very temporary. I'm monitoring extremely carefully for the downside pressure. And once again, I wanted to remind you why we started buying S&P yesterday in the morning, 8 hours prior to FOMC release, because we knew extremely well where the end of the mine, where decision point 2 is. It's extremely powerful and critical level in the market structure. It is not to be ignored. And for that reason, our long started 8 hours prior to FOMC. If you know where Fibonacci levels are, if you know alpha wave trader rules, you know where to buy and you know where to exit. And that's precisely what S&P is telling me. Stay out of the longs, don't be fooled. Sellers stepping in with vengeance and heading south. 1944 will be critical. If price is capable of breaking through the end of the minor trend, it will continue drastically lower down. It is that simple. Here are the sellers on S&P, as we knew extremely well, to ignore any longs. Buckle up. My bias this morning on S&P is very clearly bearish on hourly. It is very clearly bullish on daily. Which chart are you trading? Choice is yours. In day trading room, I demonstrate the method on hourly. If you're a position trader, you've been long since yesterday morning. Good for you. Let's take a look on oil and let's see what oil is telling us. As spelled out by the price since a week ago, no alpha wave trader Fibonacci levels. We bought at the end of the minor trend. We bought here. We know extremely well that news is completely worthless. Despite extremely bearish news, price continued dancing to the upside. Once again reminding you, no Fibonacci levels. We also knew extremely well, as spelled out for months now, that price is heading until 86 because larger time frames had been extremely clear. 86 is next. This been our structure on oil daily. Buy at 90 and 91. This been second level where S&P oil took temporary support. Reversal zone is not far off. So keep your fingers crossed that we will be in a trading room, as I expect quite a rally on oil from that level. So, and here it is, magnificent selling pressure on S&P heading to drastically lower levels because reversal zone of the bullish trend had been reached. It is that simple. If you can count till 3, you know where the end of the minor trend is. If you can count till 5, you know where the end of the major trend will be. Currently, S&P is showing me extremely clearly that this will be extremely temporary support. So buckle up. Let's see if we can catch a ride to the downside on S&P and to the upside on oil, as oil at very critical daily, not just hourly levels.